So very good morning everyone. So in the last class we started with analyzing on the various ratios in the chapter ratios analysis. Now we are going to analyze one more time the ratios in a summary and we'll start doing the problems in this regard. So come back to the ratios which we have already discussed, starting from the liquid ratios. First we started with analyzing the P&L, a balance sheet format and P&L format. Balance sheet two things will be there. One is the equity and liabilities. Second one will be assets, application of the funds. After that we went into P&L account analysis. Later we went into 6 kinds of blocking ratios are there. 6 blocks of ratios. The first one will be liquidity ratio. Second one will be capital structure ratios. Third one will be activity ratio. Fourth one is sales profitability. Next one capital profitability, and last one is miscellaneous ratios. Okay, liquidity ratios are of 2 types. Number 1 will be current ratio and number 2 will be liquid ratio. Current ratio is a formula where current assets by current liabilities. Ideal current ratio will be 2:1. Liquidity ratios talks about the short-term solvency. Short-term liabilities must be paid only, short-term assets should pay the short-term liabilities. Means current liabilities must be paid out of current assets, not out of fixed assets. Or in the other way around, amount raised for current liability, amount raised through short-term loans should not be used to purchase long-term assets. That's what we can analyze there. After that we went into the another area where we found that liquid assets are very important than having the current assets. In practical scenario, for all the practical purposes, creditors will not wait if we tell that money is blocked in the form of stock. Therefore, we have to calculate liquid ratio as well. That will be an ideal ratio of 1:1. For every 1 rupee current liability, there should be liquid asset of 1 rupee at least. That means to pay them, at least you should have the liquid assets on hand. So this is the next thing we analyzed. After that, next area we went is capital structure ratios. What ratios? Capital structure ratios. Once here on the screen I will display back. What are the ratios we are going to discuss now? I think you understood what is a liquid ratio, correct? What is the next ratio we have to discuss? Capital structure ratios. See there. Debt equity ratio, propriety ratio, capital gearing ratio, debt service coverage ratio. How many types? 4 types are there. Okay, other than this there will be other things also, a basic defense interval like that. As and when the problem comes, we will learn those formula. I told you, ratios la hell a lot of problems and questions will come. So many formula will be there. These are not the only ratios. I told you at the beginning itself. These are the main key ratios in the ratios analysis chapter. Listening, other than this, another 10 formulae are there. But those are confined to a particular question. When we come there, we will discuss about those formula. Yes, sir. Am I clear? Listening? Yes, accounts la proformas will be there, correct? Proforma means what? General structure they will give. All questions will be in the same proforma. Sometimes the new points will come, we will learn that in the form of adjustments. In the same way, these are all key ratios which one has to understand. Other ratios also will be there. When we are doing the problems, we will learn them. Shall we continue? See the screen once. What is the second type? Capital structure ratios. Capital structure, name lone clear. This is because of the capital structure you infuse. Example, a company will be financed by 2 sources of financing. One is equity and the one is a debt. Another one is in what proportion equity and debt must be infused in a company will be discussed in the capital structure ratios. See here, fastly I will complete off. Capital structure ratios. See the screen. What is the first ratio? Debt equity ratio. What do you mean by debt equity ratio? How much is the debt as a comparison with the equity? Means equity 1 rupee. How much is the debt? Is a question that will be asked here. Ideal debt equity ratio is 2:1. When I say 2:1, maximum 2:1. Yes, maximum 2:1. For 1 rupee own fund How much debt fund is tolerable? 2 rupees. Beyond that, it will become a burden for you. I told you how it will become a burden. Technically, try to understand. Debt is a fixed commitment, a variable commitment. Debt is a fixed commitment, a variable commitment. Fixed commitment. Even if your profit fall, even if your revenue fall, they don't compromise on that. They will ask their interest, they will ask their principal back. Heavy debts in the capital structure, market la sudden pull down is there. Your company is gone. So therefore, COVID time, that's what happened. Businesses which are heavily financed by debt, they are gone because business is not there, but these people will not stop asking the EMI. Listening or not? Had we paid EMIs on our car loans, EMIs on our housing loans, even during the COVID time or not? Why they will stop? Yeah, your business is dropping. That's not my mistake. I want my principal back. I want my interest back. They will not sacrifice that. That means debt should be there in the capital structure. Must and should, it should be there. I am not telling it should not be. Do you know what is the advantage of having a debt? What is the advantage of having a debt? Cheapest source of finance. Because debentures are issued at 10%, 11% interest.
Yes, sir.
Listening? We will invest, for example, you are all the debenture holders. I took money from you. What I issued? Debentures. What I took? Interest. What I took? Money from you. Who are you? Debenture holder. From you, what I have taken? Money. What I issued to you? Now debentures went into your hand, your money came to me. What I should pay you regularly? 10% interest I will pay. Your money I have taken or not? I will invest this money in 20% rate. Means I will get to 20%, I will pay you how much? 10%. I am getting a gain of how much? With your money I am getting a 10% gain. That's the advantage of having a debt. Seeing this advantage, if you infuse more amount of debt in your capital structure, you are gone. Listening everyone in the class? So therefore that's the problem behind the debt equity. So debt good or bad means it is both good and bad. Okay, good if you put in a right proportion. What is the right proportion? 2:1 is a right proportion. Clear? 2:1 is minimum or maximum? Maximum is 2:1. 1:1 is good. 0.5:1 is good. Anything is good. Okay, more than 2:1 is not recommended generally. It becomes risky for you. Listening everyone? What is the formula for the debt equity ratio? Debt by equity. Debt by equity. Very good. Now tell me, I will purchase assets in a company. Assets are of two types. Ek. Do. Number 1. Number 2. Okati. Rendu. Adi. So therefore one is a fixed asset, another one is a current asset. Assets will be purchased by stealing. I can steal asset. What I have to do? Buy asset. Buy asset out of financing. Who will give the finance? Debt will give finance. Equity also will give finance. Listening or not? How much assets are purchased in the company out of the funds given by equity is called as a propriety ratio. Is called as what ratio? Everyone loudly tell, what do you mean by propriety ratio? How much assets are purchased out of funds given by the equity. When I say equity, who are included in the equity? Equity share capital, equity shareholders, preference shareholders, reserves and surplus. Next. Equity by total assets. Equity by total assets. Understood the point clearly? That means if total assets is 100, 80 rupees is equity. Means in this 100, how much percentage is financed by equity? 80% of the assets are financed by equity. Next. What is the next one? Third one. Most important ratio in the entire capital structure ratios. In this block, most important is what? Capital gearing ratio. Listen, capital gearing ratio means it is a debt equity ratio, but in a different way. What is the formula for debt equity ratio? Debt by equity. In capital gearing, we should not consider preference shareholders or preference share capital as the owner. We should treat them as a debt. In the just 1 minute before, I asked you one question. What is equity? What is the answer you gave me? Equity share capital, preference share capital, reserves and surplus. When I ask equity definition for gearing ratio, you should not tell that. What should be the answer that should be given from you? Equity share capital and reserves and surplus. Who will not be included? Means preference shareholders are also treated as a debt. Reasons are clear. Preference shareholder, though seems to be a shareholder, there is a fixed commitment for me. What I should pay? Dividend every year. And what I should pay? Capital also I should pay back. It is a debenture in the form of a share. Like that you can understand. Therefore, which is more correct? Debt equity ratio na? Capital gearing ratio na? Now tell me, what is the answer for the capital gearing ratio? Debt by equity. But what should not be included into equity? What should be added to the debt? Therefore, tell the total formula. Debt plus preference share capital divided by equity share capital plus reserves and surplus. Listening everyone in the class? Okay, next. After that, what is the last one? Debt service coverage ratio. Debt service coverage ratio. Tell me, to pay the debt, debt is of two types. Interest, installment. Interest? They should be paid out of what money? EAT, yeah? EAT is a money for whom? Equity. EBT is amount for whom? Government and equity. EBIT and EBDIT is for whom? Debt holders. Therefore, debt holder fund is EBDIT, EAT, EBT, EBDIT or EBIDIT. Anything is okay. Are you understanding or not? So therefore, EBIDTA divided by interest plus installment. How to understand, how to interpret this? Interest plus installment. Interest 1 rupee. Interest 1 rupee. Installment 1 rupee. Totally how much it is? 2 rupees. My EBIDTA is 5 rupee. Example, let us understand how much it is. 5 divided by 2. How many times? 2.5 means my EBIDTA is 2 times bigger than my fixed commitment. How many times bigger? 2.5 times. Not 2 times. 2.5 times bigger than my fixed commitment of interest and installment. Are you understanding or not? Tell me, how much interest? 1 rupee. How much installment? 1 rupee. Listening? I have to pay 2 rupee, but my EBIDTA can pay 5 rupees of interest. I have to pay only 2 rupees. That means my company is good or bad? Good. Bigger the ratio, better the company. Yes, sir. Listening? Yes, sir. Always listen one point. Ratios, like common sense we have to apply. Don't mug up. Bigger the ratio, better means capital gearing, lesser is better. Not listening. Bigger the ratio, better the company means always don't apply that. Are you understanding? Debt equity ratio 5:1 better, bigger. Answer here, everyone. No. So therefore, try to understand. It will be, I will tell like this. One idea came. Listen. It is like comparison of marks and rank. Bigger the marks, better the performance. Lesser the rank, better the performance. Bigger the marks, 600, I got 500. Good or bad? 520, 530. Rank 500, 5,000, 35,556. Rank la lesser is better, bigger is better? Lesser is better. Marks la? Like that you should compare and understand them. Okay na? Don't mug up the concepts. Bigger is better, smaller is better. Don't mug up. Depending on the situations, you have to write the answers. Clear? So, now we completed which ratio here? Capital structure. Now, what is the third one? Activity ratios. So, simple. Activity is called as a turnover. Activity is called as what? Turnover will come because of capital. Turnover will come because of capital comes because of turnover. Turnover comes because of capital. Who is the influencer? Therefore, capital should come in denominator. Turnover should come in numerator. Okay na? Now tell me, what is the first ratio? Capital turnover ratio. Simply tell me, what is the formula? Turnover by capital employed. When I say capital employed in our business. Listening? That means our capital employed you should take. Equity share capital, preference share capital, reserves and surplus, debt capital. Yes, sir. when I say capital employed, total capital employed. Listening, tell me what is it? Equity plus debt. One more time I am telling this, please concentrate properly. This is a very important area. This was asked so many times in exam as well. See here. Capital employed can be calculated in two ways. If this is a balance sheet, assets, liability. There is equity, there is a debt, there are creditors. Fixed assets, current assets. 200 equity, 200 debt, 100 creditors. Okay, va? Next, 350 fixed assets, 150 current assets. Okay, na? Totally how much is the balance sheet total? 500. You can calculate capital employed in two ways. Way number one, way number two. Way number one, assets. Way number two, liability. When you go by assets side of capital employed, you can buy a fixed assets by stealing, by buying out of funds. That means, how much I spent on fixed asset? From where you got money? From where you should get? From capital only you should get. Assets are purchased out of the capital infused. So, these two. 350 plus 150. 350 plus 150. 150. Now answer. I will ask you a question. First answer this. What is 350? What is 150? What is 150? Current asset. Can I call stock as a current asset? Hey, are you mad or what? Can I call stock as a current asset? Yes or no? Yes, obviously. Stock is a current asset. In that, how much is the stock? Let us say total current assets is stock and cash, no debtors. Stock and cash. Stock and cash. Now tell me, how much capital was infused in the fixed assets? 350. See there and tell. 350. Okay. In that, how much is a current asset? 150. Totally how much? 500. In that 500, how much is a current asset? 100. Current assets, two things are there. What is that? Cash and stock. Cash and stock. How much cash is there? 50 cash is there. How much stock is there? 100. That 100 a current liability. I took all the stock on credit. Yes, sir. I took all the stock on credit. Credit means you paid or not yet paid. Then why you are taking in capital employed? That's why you reduce it. Are you understanding the point or not? When fund flow is not there today, why you are taking in the capital employed? Therefore, fixed assets plus current assets minus current liability means you paid or not paid. Debt means you raised fund or not raised fund. Therefore, you will consider debt. Current liability is a credit sale. You didn't credit purchase. You didn't pay money. Fund flow na? No fund flow na? No fund flow. Answer. No fund flow. Therefore, don't consider that in the calculations part. Yes, how much is a fixed asset? 350. How much is a current asset? 150. How much of fund outflow is there? 100. How much of fund outflow is there totally? 350 and 150. But in this 150, how much is no fund flow? 100 is no. Therefore, when there is no fund flow, there is no capital infused into that. Reduce it. So what is 350? Fixed assets. What is 150? Current asset. What is 100? Current liability. This is called as a formula for fixed asset plus current asset minus current liability. That is a formula for capital employed. Everyone understood how the formula has been derived or not? Okay? Now tell me. So capital employed can be calculated in two ways. What are the two ways? Assets minus outside liabilities. Assets minus outside liability being current liabilities. Okay, that means fixed assets plus current assets minus current liabilities. That is one way. Listening. Current asset minus current liability, can I call it as a working capital? Yes, therefore, instead of writing like this, some books will write fixed assets plus working capital is called as what? Capital employed. This is assets side analysis, liability side. Or you can also do in another way. The second way is this part. Okay. Instead of adding these and deducting these, you can also add these. So what is the next way? Equity plus debt is also called as what? Capital employed. Equity and debt is also called as capital employed. So this is the point, sir. So either you can write capital employed as equity plus debt, or you can calculate it as a fixed asset plus current asset minus current liability, or you can also understand it as a fixed assets plus working capital. Everyone understood the point clearly? These are the three ways. Next, what is the next ratios? Fixed assets turnover ratio. First, everyone tell me, fixed assets generate sales or sales generate fixed asset? Fixed asset should come in denominator or numerator? So tell the formula. Sales by fixed asset. That means how much sale we are covering out of the fixed assets we have invested. I will give you one example. I invested 100 rupees in fixed asset. How much? 100 rupees in fixed asset. This year sale is 200. Sale is? 200. What does it mean? 2:1. What does it mean, I ask here? Not 2:1. For every 1 rupee asset of investment, how much revenue you have created? 2 rupees revenue created. Bigger the ratio is better, lower the ratio is better. That's called as a common sense. Like that only you should understand the ratios. Yes, sir. Listening or not, everyone? Next, working capital to turnover. Working capital to turnover. Sir, I will make investment in two ways. Number one, fixed asset investment, current asset investment. Yes, out of working capital invested, how much you got the sales is called as a sales to working capital. Technically that's called as a working capital turnover ratio. Whenever in exam turnover ratios were asked, what should come in mind? How to write the formula? Who generates what? Who is the influencer? Who is the influenced? Capital will be influencer and sales is influenced. Sales influencer and capital is influenced. Capital is influencer, sales is influence. Therefore capital should come on denominator. Next, debtors turnover ratio. What is this? Debtors turnover ratio. Tell me, credit sales generate debtors. Debtors are there because of the credit sale happened. Debtors are there because of that you have a chance to make what? Therefore debtors are coming on the denominator. What is the formula? Sales by debtors. Sales by debtors. Please answer my question now. Sales by debtors mean which sale? Which sale? Next, or some books will also write as sales by average debtor. Reasoning I will tell you later. Next, if you want to know the debtors velocity, which one? Velocity means within what time we are collecting back money from them. There is a formula. What is the formula? Debtors by sales into 360. Why we should do like that also I will tell you later. We will discuss when the problem comes with listening. This formula alone don't ask me now. There is a problem on that. At the time with numbers I will explain much more clearly. Okay. Next, stock turnover. This I want to explain, sir. Please listen. Stock turnover means stock generated sales. Unsold stock is stock. The unsold finished goods we call as what? Stock. That means sale happened or not yet? Profit or no profit? So what is involved in that? Cost involved. But what is not involved? Profit is not involved. Therefore you can't take sale. When stock is involved, sale don't come. If sale is there, stock won't come. Are you understanding or not? If sale happens, stock converts into debtor. Stock converts into debtor. Stock is there, sale will not be there. Sale is there, stock will not be there. Both can't run on a same platform. Listening everyone? So therefore what should be taken whenever I say stock turnover? Cost of goods sold by stock, or cost of goods sold by average stock, or turnover if you want as a days, number of days. Stock by sales into 360. That reason I will tell you when we come there. Listening? So same even in the case of creditors. So this is all which ratios? Activity ratios. Next one. What is the next one? This you should tell. Sales generate profit. Profit generate sales. So now who is the influencer? So sales should come on the. See. Fast. Fatafat. Answer. Gross profit ratio. Gross profit by sales. Net profit ratio. Net profit by sales. Next, operating profit ratio. EBIT by sales. Another name for operating profit is EBIT. EBIT by sale. Cost of goods sold to sales. Cost of goods sold divided by sales. Okay. How much is the cost on the total sale? Yes, sir. Can I separate from the sale profit and cost portions? Yes, sir. So someone not listening, please. Sale 100 rupee. Can I divide cost and profit portions separately and show? 80 rupees cost to 20 rupees profit. Can I do like that or not? If I do 80 by 100, what does it mean? Cost. What does it mean? That's what this is. Cost of goods sold by sales. Okay? Listening? Very important two formulae. Sir, on this 5 and 6, we are having separate discussion. DuPont analysis is there. We will not do today. Next sessions it will come. A big discussion on understanding return on capital employed in a correct way. We are not going to do that now. Okay, just prima facie basics I will explain now. Main analysis we will do when we come to DuPont analysis. See there. What is the formula? Fifth one? Very important formula. Listen, I will interpret the results. After that you can write down and complete it. Return on capital employed. Capital will be given by whom and whom? Equity as well as equity and debt gives the capital, correct? So capital is not given just by one person. Capital is given by two persons. Number one, equity. Number two, debt. Debt gives money. For that, what they will expect in return? One second. What is the concept? Return on capital employed. Now tell me. Capital employed means whom and whom? Equity and debt holders will expect interest, correct? Yes, sir. What they will expect? Yes. Equity will expect what? Dividends you keep away. Dividend is something which may be paid, may not be paid. Mandatory, optional. First, what should be there? Earnings should be there. Yes, sir. What should be there? Earnings should be there. Dividend may be paid, may not be paid. If earnings are there, dividends I can pay, I may not pay. Yes, sir. Now tell me. Equity shareholders want interest or dividend? Answer. Dividend will come out of earnings. Dividend will come out of which earnings? Earnings before tax, earnings before interest and tax, earnings after tax. So equity shareholders expect a return called as a EAT. Who expect a return called as? Debt holders will expect EBT or EBIT. They don't expect anything. Whether you have profit or not, pay my interest first. Yes, sir. I don't have EBIT means, so what he will tell? Yes, technically, EBIT money only will be used to pay them. Yes, but EBIT not there, yeah? Will they sacrifice? No. Therefore, debt holder psychology is different. Generally, we pay out of EBIT, but even if EBIT is not there, we should pay them. Yes, sir. Listening to my point or not? Yes. That means what debenture holders want? EBIT, they want interest. Yes. You may have 1000 crores EBIT. You may have 0 EBIT. Pay my interest. Yes. Are you understanding or not? When you are growing, I am not asking your growth. You are falling, don't show that fall on me. Are you understanding or not? So therefore, tell me, guess the formula. You are a debt holder. What you will expect? Yes. Answer, yeah. You are a equity, what you will expect? Earnings. So total both of them. I want interest as a debenture holder plus I want PAT for the equity holder, correct? Capital employed is in the denominator. Capital gives return or return gives capital? Capital should be in denominator or numerator? Denominator what should be there? Capital employed. On that capital employed, who will expect a return? Debt expect a return called as? Equity expect a return called as? So tell the formula totally. Interest plus profit after tax divided by capital employed. That's the formula. Everyone understood the point clearly? What is the next one here? Return on equity. Now tell me. Equity, whether you include preference or not is entirely at discretion. Now tell me first. Equity shareholders expect a return called as interest, PAT. So tell the formula. Return on equity means return by equity. What is return? PAT. Below equity. Answer over. That's the formula for return PAT divided by equity investment. With this, we have completed what ratios? Which ratios? Profitability ratios. This is all analysis. We will write later. What are the last one? Miscellaneous ratios. Okay. Profitability up to there completed. Next, keep the heading everyone. 5, 6 not completed? Write down the 5 and 6 then. Write down this. So notes below this don't write now. I told you not DuPont analysis. There we will write. Can I go to the other ratios? So we have completed here profitability ratios. Next one. Don't write these notes. This is the notes we are going to write in DuPont analysis. Take this. Keep the heading miscellaneous ratio. Miscellaneous ratios. Okay, heading only. Stop there. First I will explain all the ratios. After that you copy. Very easy. 10 seconds each. More than that not required. See here. What is the first concept? Earnings per share. So name lone clear. Earnings per share means what should be done? Total earnings divided by number of shares. When I say earnings, it should be earnings available to equity shareholders. Earnings available to the equity shareholders. Equity shareholders amount. Clear? Next, it should be before tax or after tax? Everyone, before tax or after tax? After tax it should be. So it should be after the tax. Up to here everyone understood? What is the formula for EPS? Earnings divided by number of shares. With that knowledge, tell me what is the dividend per share formula? Total dividend divided by number of shares. Very good. Next, MPS. Same. Total market value divided by number of market. Listen to this word. Market value of the company is also called as a market capitalization. Tell me what I said. Market value is also called as market capitalization. In the news channels, if you see market cap, they will use the word. Market cap means this is the meaning. Market value. Okay. Next. What is the next one? Dividend payout ratio. So listen. From where you will pay dividend? From here. From where you will pay? From EPS you will pay DPS. Correct? I got 10 rupees EPS. I paid 5 rupee dividend. What is the payout ratio now? 50%. That's called as a dividend payout ratio. Tell me what is the formula for dividend payout ratio? D by E. D by E. Also called as DPS by EPS. Hello everyone.
Yes, sir.
Next. What is the next one? I will ask you a question. I am writing here roughly. Tell me. My EPS is 10. DPS is 6. What is the balance called as? Retained earnings per share. Retained earnings per share. What is this? Not number, yeah. What is this? Earnings per share. What is this? That means from this 10 rupees, how much I have paid? 6 rupees I have paid. What is the balance available? 4. What is this 4 called as? Retained earnings per share. Retained? Earnings per share. Tell me. 6 by 10 is called as? DPS. Sorry. Dividend payout ratio. Dividend payout ratio. 4 by 10 is called as what ratio? Retention ratio. Retention? Ratio. Tell me, what is the formula for retention ratio? Retained earnings per share divided by EPS. Divided by EPS. That's all. Retained earnings per share divided by EPS. Next one. What is the last one? PE ratio. Price earnings ratio. What ratio, sir? Price earnings ratio. Please tell me again. What is the ratio? Price earnings ratio. This is very, very popular in your questions. Lot of discussion will be there in PE ratio, but not now. I will tell the formula first. Try to understand. There is a company. That company has given EPS of 10 rupees. Price of the share is 100 rupees. Now tell me, how many times the EPS the price is? How many times the price of the share to the EPS? This is called as a PE ratio. Bigger, better. Bigger the PE ratio, better the company. Are you understanding or not, everyone? Bigger the PE ratio, better the company. Meaning analysis we will see later. I will show you online trading also. PE ratio you can't understand theoretically through books. I will show you online trading. At the time when I buy a share or sell a share in the class, you can understand how PE ratios are affected. Yes, okay, now live trading we will do. Anyway, during class timings, trading will happen. So at the time we will see how trading will be done, how buying and selling of shares will happen. Yes, at the time I will only show you what is a PE ratio, how it actually apply. But one thing I wanted to convey, what is the formula for PE ratio? Clear. Price earnings. Tell the formula. MPS by EPS. Price means what? MPS. Earnings means what? EPS. Price earnings means what? MPS by EPS. Expressed as a percentage of times. Everyone. So tell me, bigger the time, better the companies. Understood the point clearly? That's all. These are all the various formula. With this, we have completed analysis on all the formulas applicable. We have to start doing the problems. Everyone understood all the formulas analysis? Please write down here. Keep the heading. Miscellaneous ratios. Write down the notes. For yesterday's class, this is a compensation. For yesterday's class, this is a compensation. Yesterday disturbance has happened in class now. That's why I am covering again. Write down all the ratios. please make a small change. Here retention ratio means retained earnings per share divided by earnings per share. By mistake I have written number of shares. Please change it to EPS. Done? Market capitalization meaning market value. One share means MPS, market price per share, into total number of shares is called as market capitalization. Total capital value is called as market capitalization. Completed? Sir, if you are all completed, we'll be directly starting with the problems now. There are so many problems for us to solve in this chapter. One by one we have to start doing it. Shall we? Doubt, huh? Yes. Why earnings per share is? I didn't understand. Okay, EPS, I didn't understand the question then. EPS is belonging to equity shareholders. Oh, we are asking why not preference. EPS is earnings available to equity shareholders divided by number of shares. Means EAT will come minus preference dividend you will take. Then what will be the balance? Earnings available to equity shareholders. That divided by number of shares is called as EPS. That means already preference dividend is deducted. After that only we will take. So okay, everyone completed writing the notes? Shall we start doing the problems in that regard? Let's begin. So the real calculations will start now. Before that, listen everyone in the class, 2 minutes time from the beginning till the end. Ratios notes you have written, take 2 to 3 minutes time. Brush them fastly. Complete the revision. Once after you are comfortable, we'll start doing the problems. There are around 50 problems in this chapter. We have to do. Yes. Propriety ratio, total assets are? Sir, I didn't give time for you to talk, please. I think you misunderstood my words. Hello, everyone. Please read all the formulas in the beginning, yeah? What's wrong with you? Everyone, will you read or not? Start from the, sir, when you do the problems, you will again feel uncomfortable. Please see all the formulas from the beginning. 2 to 3 minutes time. Fastly, if you complete them, we'll start doing the problems. Okay. Shall we start doing the problems now? Okay. Everyone, please open your notes. Keep the heading illustrations. One by one, let us solve. How to present the answers also I will tell you when we are writing. Write down. Illustrations. Whenever you are writing the illustration, have a habit of writing the page number there. Are you understanding the point? Such that at the time when you refer during examinations, again you need not search where that illustration will be. Study material, one page number will be given for that or not? Put that page number there and write down. 3.45 page number if you write now, at that time directly you can go there and see the particular question. Shall we begin? Write down there. Illustration 1. Page number 3.45. Thank you. Page number 3.45. Written the page number. Let us see the question first. Listen. Problems will take a lot of time to solve because big problems, all are 10 marks, 7 marks, 8 marks questions will come from this chapter. Therefore, let us first read the question. After reading the question, we go into the analysis. This is how questions will be given here. Like this 10 marks, this is a 10 marks question given in exam already. How question will come? Let's see. In a meeting held at Solon, towards the end of 21-22, the directors of HPCL Limited have taken a decision to diversify. At present, HPCL Limited sells all finished goods from its own warehouse. Company issued debentures on 1/4/22 and purchased fixed assets on the same day. Means by issuing debentures, money has been obtained. Fixed assets are completely purchased out of debt funds. Those fixed assets. Purchase prices have remained stable during the concerned period. Following information is provided to you. Income statement. I told you the income statement. See there. First one is 2 years information they have given. What I told you, intra-firm comparison. What do you mean intra-firm comparison? Comparing our past with our present. Same question. Intra-firm comparison. 21-22, 22-23, you have to compare the performance. Okay, let's see. Cash sale, credit sale, cost of goods sold, gross profit, operating expenses, warehousing, transport, administrative, selling, net profit. Assets and liabilities are also given. Fixed assets, receivables, cash at bank, stock, total current assets. Total current assets. Fixed assets is 30-40, receivables 50, cash 10, stock 60, total current assets 120-183. Payables, total current liability, working capital, net assets. Net assets. Share capital 75-75, reserves and surplus 25-42, debentures 30. You are required to calculate the following ratios for the years 21, 22, 22, 23. First one is a gross profit ratio. What ratio? Gross profit ratio. Second one, operating expenses to the sales ratio. Next one, operating profit ratio. Next one, capital turnover ratio. Next one, stock turnover ratio. Next one, net profit to net worth ratio. Net worth means equity. Net worth means what? Equity. Owner's equity is also called as a net worth. Next one, receivables collection period. I told you na, third bit la collection period. Just now 15-20 minutes back when we have written formula, debtors turnover, third formula I will tell you when we go into the problem. I said na, this is the area. Ratio relating to capital employed should be based on the capital at the end of the year. Give the reasons for the change in the ratios for 2 years. Assume opening stock of 40,000 for the year 21-22. Ignore taxation. This is how questions will come in exam. Okay. First, take 2-3 minutes time. Read the question. That's why I told you. Maximum per day we can do 3 problems. Like that it will take so much time to complete entire chapter. But once completed, you will be covering out a 10 marks to 12 marks chapter. Listening everyone? Please. Read the question. Don't see the answers first. Those who see the answer, my curse, I will not tell. Read the question. Don't see the answers. Page number 3.45. Don't waste time. Don't talk. Read the question, observe all the numbers properly. As if it is an exam hall, please see the question properly. Have you read? Everyone, have you read? First, I have one question to ask before we start. All the ratios, whatever you are seeing, has already been discussed or not? Yes, that's what I am also telling. First, if you understand all the basic ratios what I discussed in the class, any new ratio if it comes, there itself we can write the notes and complete those ratios. Listening. First point number 1. Do we know how to calculate gross profit ratio? Yes, tell me the formula only. I will write here. GP by sales. Next. Operating expenses by sale. This we didn't write any formula. But it is quite common sense to write the answer or not. Next. What is the next one? Means what? EBIT by sales. Capital turnover. Sales, turnover or sales? Sales divided by capital employed. Next, stock turnover. Correct? Sales are cost of goods sold divided by sales. Oh, sorry. Cost of goods sold divided by stock. Now answer my question clearly. In the question, if you observe, where is the question? In the question he has given opening stock. If you observe, what is given? Why he has given opening stock? Average stock. What we have to calculate? Average stock. Formula, 2 types of formula is there. Either you can take stock or average stock. When he has given opening stock, it is an indication for you to tell that you have to calculate using the average stock formula. If he didn't give opening stock, what is the formula for average stock? Opening stock plus closing stock divided by 2. That means to calculate average stock, what is the required information? Everyone, opening stock. When opening stock is given, what is the indication given to the student? Calculate the average stock. That's the reason why they have given that info. Okay. Next, what is the net profit to net worth? Net profit divided by net worth, equity into 100. Next one, what is the next one? Receivables collection period. You know that formula, kada? Debtors the formula. Debtors velocity. That only we have to apply into 360 will give you the particular receivables collection period. Next, ratio relating to capital employed should be based on the capital at the end of the year. Capital at the end of the year, not at the beginning of the year. Give the reasons for the change in the ratios in 2 years. Assume opening stock of 40,000 for the year 21-22. Ignore taxation. So in this question, taxation is involved or not involved? Not involved. Shall we start doing the answer? Yes. Let's do together. Keep the heading. I1, you keep the heading. Illustration number 1. I will tell you how to present the answer as well. So please, one by one, let us see. Keep the heading. Step 1. Step 1. Calculation of gross profit ratio. Calculation of gross profit ratio. Calculation of gross profit ratio. First, write down the formula clearly. Everyone, present the formula properly. GP ratio equal to, tell the formula. GP by sales into 100. GP by sales into 100. (21, 22, 22, 23). Particulars. First thing you need to always remember, don't assume that person valuing your paper knows everything. Present everything clearly in the paper. How to write? See how I write? Like that only you should present. A. Gross profit. First write down. See the question. 21-22 year, what is the gross profit? 64,000. 22-23? Write down. 64 and 76. Next, B. Sales. See the question and tell. What is the sales in the previous year? 3 lakh. Next year how much? 3,74,000. $3,74,000. C. GP ratio. Write down A by B. I think you can understand why we are writing A by B. A by B or A by B into 100. Anything is okay. Calculate everyone. 64,000 divided by 3 lakh into 100. How much? Take another colored pen and write down 21.33%. 21.33%. Next, 76,000 divided by 3 lakh 74,000 into 100. How much? 20.32. Funniest part is gross profit increased, sales also increased, but the ratio increased or decreased? Again, sir, numbers increase, then definitely it should increase. Question arises, but you should observe. I will analyze this change. See there. Please see there. How much is the sale value previously? How much is the cost? Now tell me, what is the percentage of cost on the sales? COGS by sales. 2,36,000 divided by 3 lakh into 100. How much? 78.67% is the cost. Hello everyone. Next year, 2,98,000 divided by 3,74,000 into 100. How much? 79.68%. Because of increase in cost, gross profit has fall. That's the reason we need to give. Everyone understood the concept clearly? Yeah. That's what he is asking in the question. Give the reasons for the change. What is increased? Percentage of cost to the sales have increased. Because of that, gross profit has fall. Okay. Below write down the reason. Sir, reason when he asked to write comment, don't write gross profit has a fall. That he also know. Some people will write that gross profit has fall. That I can also understand by seeing the notes. Tell.
The question it has given, the purchase prices have remained stable during the.
Purchase prices have
remained stable during the concerned period.
Yes. Cost of goods sold, purchases only will not be there. Na? So many things will be there in cost of goods sold. Labor expenses will be there. Overheads will be there. Many things will be there. Cost of goods sold means till the point of sale, whatever cost you incur, including selling, distribution expenses, everything will come. Costing, you might have. Costing to what extent class is completed? Cost sheet completed, Format completed, Prime cost, everyone know? Prime cost. Opening work in progress, closing work in progress, factory overheads, manufacturing overheads, all these things will add. Cost of production, opening finished goods, closing finished goods, cost of goods sold. That is the cost of goods sold. Okay. Till the point of sale, whatever the cost you incur will come under cost of goods sold. That is only information given. Means fall doesn't happen because of purchase prices, fall happen because of overall costs. Sorry, write down. Gross profit ratio A by B 21.33 and 20.32. Next. Below write down comment. Write down. In the year 21-22, COGS to the sales is 78 point something. You got how much? 78.67%. Whereas cost of goods sold to sales for 22-23 raised to how much you got? 79.68%. Since cost of production is increased, GP ratio has fallen. Okay, na? Next. What is the step 1 we completed, everyone? Which ratio we completed now? Gross profit ratio completed. Like this we need to complete. Tick this, first one completed. What is the second one? Operating expense. I will ask you one question, answer. Listen. 13, 6, 19, 11. Totally how much it is? How much it is here? Now tell me, operating expenses have increased or not increased? Everyone? Increased. Okay? So tell me, operating expenses increased. Operating expenses to sales. How much is a sale? Sale, yeah, 3,74,000. Okay, na? On that, can we calculate the ratio as an expense or not? Lesser ratio better, more ratio better? It is expense or profit? Expense. Lesser is better, more is better? Lesser is the better one. Shall we do that? Yes, right on. Keep the heading. Step 2. Operating expenses to sales ratio. First write down. Operating expenses to sales ratio equal to sales into 100. Presentation lo don't make any changes, write as it is. Particulars. '21, '22, '23, '22, '23. So first, what is the step number 1? What is the point we need to write first? A. What is the A? Operating expenses. B. Sales. C. Ratio. A by B into 100. Please tell me what is the operating expenses? How much? 49,000. No. 49,000. Next year? On a sale of how much? Here on a sale of how much? 70? 49,000 divided by 3 lakh. 16.33. Next, 57,000 divided by 3,74,000 is 15.24. Okay, I will ask you one question. Tell me, how much operating expenses you have incurred in the last year? How much? 49,000. For how much sale? How much sale? That means for every 1 rupee sale, how much? For every 1 rupee sale, you have spent 16 paisa, 0.16 of a rupee on the operating expenses. But this year for 1 rupee sale, how much only you spend? Company has been better performing or underperforming? Better performing. With lesser expenses, you generated extra sale. Listening, everyone in the class? That's how you should comment. Sir, do you understand how to comment on the answers? Don't write operating expenses have reduced. That everyone will know. Okay, you should comment on the reasons why it has been reduced. Okay. Write down. In the year 21-22, for every rupee 1 sale, we spent rupee 0.1633 on operating expenses. Whereas in the year 22-23, for generating rupee 1 sale, company spent only rupees 0.1524. Hence, company generated higher sale with lower cost. Write down the notes clearly. Okay now? So we now completed how many ratios and comments here? 2. What are the 2 ratios we have commented? We completed gross profit ratio and we completed operating expenses to sales ratio. What is the third one? Operating profit ratio. Let's do step 3. Step 3. Operating profit ratio. Please don't talk. Everyone tell me, what is the operating profit ratio calculation? Tell the formula. EBIT divided by what? Sales. Write down particulars clearly below. What is the bit number A? EBIT. B will be sales. Operating profit ratio. A by B into 100. See the question. See the question and tell me. EBIT is also called as what? Net profit. EBIT is also called as what? Everyone? So listen carefully. Now the question arises. Please. Shall we? Now answer. If you calculate gross profit as a EBIT, then what is the difference between gross profit ratio and the operating profit ratio? You didn't understand what I said. If you take gross profit as EBIT, then what is the difference between EBIT and gross profit ratio? Gross profit ratio already we calculated or not? Yes, hello, I am talking with you everyone. Yes, what is the gross profit ratio answer? Gross profit divided by sales into 100. You got some answers or not in the question? Yes, okay. If you take EBIT as a gross profit, okay, then what will happen automatically? Same answer will come. Yes, therefore, rethink, read the question properly. Read the question properly. Read the question. Don't see the answers. Yes, correct. Okay, na? Have you read the question? First answer my question clearly. Gross profit and EBIT both are same or not same? Definitely not same. Okay. Now my question is, what do you mean by EBIT? Don't tell the full form. Another name for EBIT is what? Operating profit. Means what expenses you should deduct? Operating expenses also you should deduct. Now my question is, net profit. Which profit? Net profit is EBIT, yeah? Yes, in this question, because this question don't have interest, this question don't have tax. In this question clearly at the last he gave one hint point. What is that? Ignore taxation. Tax there or not there? Not there. Interest cost there or not there? Not there. When interest cost tax is not there, whatever the net profit will become the EBIT. Adi hint. Did you understand the point or not? In this question, what is the EBIT? Net profit a EBIT. In this question only. Why in this question net profit is a EBIT? First answer my question. Answer my question. See here. Sales minus cost EBIT. Correct? Minus interest EBIT. Minus tax EAT. EAT is called as what? Net profit. Now see the point. Interest is not there.
Yes, sir.
Therefore 0. EBIT will become EBT. Correct? Tax is not there. Therefore this is also 0. Therefore EBT will become EAT. EBIT became EBT. EBT became EAT. Means EBIT and EAT are same. That's why we are taking net profit as EBIT in this question. Are you understanding the point or not, everyone? So in this question, what is not there? Interest is not there. Along with that, what is also not there? Tax also not there. So net profit will become EBIT. Understood the point clearly? Not just nodding the head, everyone in the last benches as well understood the explanation clearly? Tell me, why net profit is EBIT? What is not given? No interest, no tax. Therefore EBIT will become EAT. Net profit. Therefore net profit EBIT. In this question, next question he may change. Shall we do it together now? Write down. EBIT on the head, give a star mark. We will give explanation below. Tell me what is the EBIT numbers that they have given in the question. 15,000. Next one. 19,000. Okay, next. What is the sale? 3 lakh. 15,000 divided by 3 lakh into 100. How much it is? 5%. 19,000 divided by 3 lakh 74,000 into 100. How much? 5.08%. Technically, how to write the comment? There is no significant change. Don't write there is a 0.08% growth. 0.08 is a growth. What you should write as a comment? There is no significant change in the EBIT. I mean EBIT to sales. That means for increased sales, proportionately for increased sales, proportionately operating expenses are also increased. Understood why EBIT almost at the same level? Though there is a small increase, along with that what is also increased? Operating expenses also increased. Overall EBIT stands at the same level. Understood the point clearly? Sir, if you are done with this, we will go to the next point. But before that, we have to write one small note for the EBIT. Right on there. Notes on EBIT. Notes on EBIT. Write down. In the given question, there is no interest and taxation. Therefore, both are same. So in the given question there is no interest and taxation. Therefore, EBIT and net profit means profit after tax both are same. Completed? That's all. This is the notes that we can give on EBIT. Sir, everyone understood the EBIT ratio on the sales or not? Everyone? What is the third ratio we completed now? Operating profit ratio. What is the next one? Sir, please tell me what is the formula for the capital turnover? Who influences whom? Capital influences sales. Therefore, what is the formula? Sales by capital employed. One small clarity for my side. What is the capital employed at the beginning of this year? What is a capital employed? What do you mean by capital employed? Can you please tell me? Capital employed means equity plus debt plus reserves and surplus. Correct? What is the equity? 75,000. What is the reserves and surplus? 25,000. First year debt is there or not there? Not there. Next year what also added? Debt also added for the next year. Are you understanding the point or not? So this is a point that we have to understand. So up to here, everyone had the clarity clearly? Now, listen carefully. We have to calculate the capital turnover ratio. Formula is sales by capital employed into 100. Then you will get the capital turnover ratio. Shall we do it together? Please keep the heading. Step number 4. Capital turnover ratio. First write down the formula. Sales by capital employed into 100. Shall we continue? Sales by capital employed into 100. Write down the pro forma clearly. Particulars 21 and 22, 22 and 23. Okay. Capital turnover ratio. A. Capital employed. Next we will write sales, B by A will be the answer. Always A by B need not be the answer. Source I am writing first. I know. In this, for understanding, first I am writing the source here. Don't mug up the concept. First only this should come. Tell me, what is a capital employed? See the question and tell. What is a capital employed? Rupees 1 lakh. Second? 1 lakh? Next. B. Sales. Tell the value please. 3 lakhs, huh? Next. C. Capital turnover ratio. A by B, B by A na? Tell me, you can write either in times or you can either write in percentage. If you write in times, 100 you need not multiply, directly you can write in times. Listening everyone? Or if you multiply with 100 percentage, answer will come. Both are correct. Both notations let us write. Tell me, how much it is? How much percent? Yeah, 300%. Or, write down, or 3 times. Or 3 times. Or 3:1. Means for every 1 rupee of your capital employed, how much a sale has been generated? 3 rupees sales has been generated. Isn't it? For every 1 rupee you invest, how much money I got it back? 3 rupees I gave back. For every 1 rupee investment. Next, on the other hand, 3,74,000 divided by 1,47,000. How much it has become? 254.42%. Tell me, or 2.54 times. (2.54 times) or how to write this? 2.54:1. Can you please explain how to understand this? For every 1 rupee capital invested, how much sale we generated? 2.54. That means you are underperforming or overperforming? You are underperforming or overperforming? Underperforming. Previous year, 1 rupee capital, how much sale you generated? 3 rupees. Now how much you generated? 2.54. Your performance has increased or reduced? Reduced. Company could not make best use of capital. Company did not make best use of capital. Right on. Right on. In the year 21 and 22, for every rupee 1 invested, company generated a return of rupees 3, whereas in the year 22-23, for every rupee one invested. Company could generate only rupees 2.54. Hence, the company is not making best use of capital. Okay, bye everyone. So what is the ratio we have calculated now? Capital turnover ratio. So this problem has been given for 10 marks in exam. Okay, how many ratios are asked totally? 7 ratios. With the analysis, with the 2 years calculations, if you do, then you will get that 10 marks in examination. Hopefully you can understand how the questions will come. So there is no other option. Patiently we have to think, we have to put the numbers, we have to write the notes and complete the chapter. Shall we? Yes, next. What is the next one? Please everyone tell me the answer. What is the formula for this stock turnover? Sales or cost of goods sold? Divided by stock, average stock. Average stock formula. Opening stock plus closing stock divided by 2. I will ask you one question. 21-22's closing stock will become 22-23's opening stock.
Yes, sir.
But where is the opening stock of 21-22 given in the question? I asked you to read the question, that's why. What is the opening stock given in the question? 40,000. But next year opening stock they need not give, because this year closing stock will become the next year's opening stock. So therefore, how many stock calculations we need to do now? 2 types. First, see the question and tell me, what is the closing stock of this year? 60,000. What is the closing stock of next year? Can I say this is the opening stock of 22-23?
Yes,
can I say that or not? Yes, but what is the opening stock for this year? That's why he has given in the question. I think you can do now. Yes, let's start doing, sir. Stock turnover ratio. Step number 5. Stock turnover ratio. Tell the formula first. Stock turnover ratio equal to cost of goods sold divided by average stock. Average stock. Okay. Write down the format as it is. Workings we will show below. Particulars. Write down clearly. A. Cost of goods sold. B. Average stock. C. Ratio. A by B or B by A na? A by B. First, average stock we need to make a calculation. Okay. Put a red mark there. Below write down. Average stock calculation. Everyone please help me with the numbers. Average stock calculation. First write down the formula for average stock. Tell me. Number 1, opening stock. Number 2, closing stock. Number 3, average stock. What is the formula for the average stock? Opening plus closing divided by 2. Opening plus closing divided by 2. Okay, tell me, what is the opening stock of 21-22 they have given in the question? What is the closing stock given in the question? In the balance sheet you have to see and tell how much it is. This year's closing will become the next year's opening. Tell me. Closing is 94,000. Average stock. First year, what is the average stock? Rupees 50,000. Next year, 94,000 plus 60,000 divided by 2. How much it is? 77,000. Use those numbers in the above column. Please check the problem and tell me what is the cost of goods sold. He has given in the question 2,36,000, 2,98,000. Correct? Write down. Two lakh 36. Second one 2 lakh 90. Average stock 50,000. Ratio 50,000 divided by 2,36,000. Sorry. 2,36,000 divided by 50,000. How much? 4.72. Next, 2,98,000 divided by 77,000. How much it is? 3.87. These are all times. Okay, these are all times. So first answer my question. Listen. How many times is my cost of goods sold to the total stock? How much is my cost of goods sold to the total stock? Sir, first one thing, answer my question. Stock is sold or unsold? Since unsold, can we add profit or cannot add profit? How many times is my cost to the stock? 4.72. That cost to the stock has reduced to how much? 3.87. 3.87. That means with regard to the cost of goods sold, company has performed well or not performed well?
Sir, they have
You didn't understand. See there. 1 second. See there. Take a minute time. Analyze and then tell the answer. Analyze and then tell the answer. Don't see the answers here. Whenever I ask you the question, try on your own. See the numbers first. Try to analyze. Now tell me, overperformed or underperformed? You only said overperformed. You said underperformed. Tell me, underperformed or overperformed? How to understand this? I will first give you a meaning. See here. Previously, how much is the stock I utilized? Average, how much stock I have utilized? 50,000 stock I utilized. Hello, correct? For the 50,000 stock I used, how much worth of goods I manufactured? 2,36,000 worth goods we manufactured. I said manufacture, not sold. What I said? Manufactured. I will give you an explanation. See here. Some are not in this world. See there. Production process will happen on one day. Na? Production process will happen throughout the year. See here. I will draw a graph to make you understand. Please at least see the screen. Meaning of stock turnover ratio we are going to understand. As a formula we already read previously. We are going to analyze here. Listen. Sales cost of goods sold. Sorry, stock cost of goods sold. Two things are there. Correct? Now tell me. Stock will be there at the beginning of one day, second day, third day, evenly throughout the year. Production process will go on throughout the year, only once in a year. First day, last day, throughout the year. Okay, now tell me. Cost of goods sold. Cost of goods sold. Okay. Now tell me. As the number of units increases, cost of goods sold will automatically increase. Means what? If you observe a graph this way, see here. Shall we? Time, stock. Time, stock. How it will look like? See here. Today, company started at this stock level. See the mark. Started at this level. Daily it will consume the material. It will come down. Again, at a point, they will again buy the stock. Listening? Again they will buy. Again it will be completed. Slowly every day. This is days. As the time is passed by. Time passing by means right hand side or left hand side? Doubt you got. Time will go back side. Therefore, graph can never go back when time is involved. Time involvement, what cannot be done? Graph can't go back. It can only go front. Are you understanding? When I draw a line like this, what does it mean? Time is passing by. Sir, tell me. Today I started with 10,000 units here. How many units, sir? 10,000. Tomorrow, I utilized the units. 1,000 units I put in the process of production. 10,000 will become 9,000. 9,000 becomes 8,000. Slowly it will come to how much? 0. Again I will buy the stock. So again I bought, making it 10,000. Again it will fall. Again I will buy. Again it will fall. Like this it will go. The stock process will go like this. Last benches, everyone understanding the point or not? About direct entry batch, everyone understanding what I am saying? I repeat. Stock will be same throughout the year. It will fluctuate. Everyone. Opening la how much? Closing la how much? 0. I sent 2 persons. Person 1, person 2 to the go down. I sent her at the beginning of the month. Okay? I sent her to the go down. I asked, go and tell me how many units of stock is there. She went to the go down. She came back and said, sir, 10,000 units are there. At the beginning of the month, how many units will be there? 10,000 units only will be there. I sent her at the end of the month. She also went to the go down and said, stock is not there. At the end of the month, what will be there? Stock will not be there. At the end of the month, we will reorder again and we will buy the stock.
Yes, sir.
Tell me, first person right, second person right, both are right? Answer? Both are right. But both are also wrong as well. Really 10,000 stock is there every day, na? Really no stock every day? That's why we take average. Are you understanding or not? It is not 100% true on 10,000. It's not 100% true on 0. Listening or not? Opening is how much? 10,000. Closing is how much? 0. Average is how much? 5,000. That's why average stock we will take. At any point of time, almost in and around 5,000 units of the stock will be there in the go down. Are you understanding or not? Sir, I will ask you one question here. Answer. 2,000 units is near to 2,000 units is near to 10,000 or near to 5,000. Next, 7,000 is near to 0, near to 5,000. That's why average we will take. Average is nearing to the accuracy always. Are you understanding the point or not? That's why formulas always consider what? Stock, closing stock, opening stock, average stock. That means stock means outflow of cash, inflow of cash. Outflow. Stock purchase means inflow na outflow na. We sold or not it? Not it. Means for 1 rupee of stock you made, for 1 rupee stock is purchased. How much worth of goods you are manufacturing? 4 rupees worth you are manufacturing.
Yes, sir.
How much worth? 4 rupees worth. In our question I am talking.
Yes, sir.
How much worth? 4 rupee worth cost product we are manufacturing.
Yes, sir.
But for the same 1 rupee in the next year, we are manufacturing the goods worth how much? 3.87. We are underperforming or overperforming? Underperforming. That's the answer for that. Hopefully everyone understood the meaning of that. You asked one question, why stock turnover? This is the reason. To understand for the cost incurred, how much worth goods I am manufacturing. Are you with me, everyone?
Yes, sir.
Last year, how much I spent? 1 rupee I spent. On what? Stock. How much worth goods I manufactured? 4 rupee worth goods I manufactured.
Yes,
For that 4 rupee, I will add profit or not?
yes, sir.
If you tell like this, 1 rupee I purchase stock, 4 rupees worth, 4.72 rupees worth goods I manufactured, 2 rupee profit.
Yes,
At what rate I sold? Until 1 rupee stock ki I realized 6 rupees profit.
Yes, sir.
That 6 rupee total amount I realized. This year, for the same 1 rupee of the stock I put on the outflow, how much worth of stock is manufactured? 3.87, 2 rupee profit. Now it becomes only 5.87, yeah? That means I am underperforming or overperforming? Underperforming. That's the meaning of this ratio. Everyone understood the reasoning behind the stock turnover ratios clearly, yeah? Everyone in the class understood why stock turnover ratios are calculated. It will make you to understand for the cost you incurred, how much worth goods you are manufacturing. Clear, everyone? Shall we write down the notes? Write down, sir. Comments. Now did you understand why we started first with ratios? Questions will take so much time to solve, so therefore please. But if you do 3-4 questions in ratios properly, every question that comes in exam will be in the same way. For first 3-4 questions, this hard work will be there. After that, ratios directly we can calculate it and we will put the numbers and we can complete it. Problem will be only with the first 2-3 problems. If you understand 2-3 problems, every question will be in the same way. Missing figures may be given, non-missing figures questions will be given. That's just basic analysis. Head on, comment. For year 21-22, for every rupee one of stock, the company manufactured goods worth rupees 4.72. And in the year 22-23, it is rupees 3.87. And therefore, company has not performed well in utilizing its stock. Company has not performed well in utilizing its stock. Everyone completed writing? So how many ratios we have calculated here totally up to here? 5 ratios we have calculated. Okay. Next, keep the heading net profit to net worth ratio. Net profit to net worth ratio. Can you please tell me what is net worth? Equity. Net worth means what? Equity. Equity means what? Share capital plus reserves and surplus plus debentures. Net worth means you can understand in the two ways. Listen. When you take net profit, which one? Net profit. So please everyone listen. In this particular question, I mean in the question we are doing now, net profit and EBIT both are same, correct? Why net profit and EBIT both are same? There is no interest cost given in the question, and what is also not given? Tax also not given. Therefore we are not doing anything, directly we are doing it. But in technical terms, if you take, EAT belongs to whom? Net profit means EBIT or EAT? EAT belongs to whom? Equity shareholder. Therefore, net worth formula, what we have to consider? We should consider only equity share capital plus reserves and surplus. What should not be considered? Debentures should not be considered. Reason, did you understand or not? Again I am repeating, some are not in this world. Listen carefully. Point number 1. In this question, net profit is EBIT. Why in this question net profit is EBIT? Because there is no tax, there is no interest, EBIT and EAT both are same, correct? For example, imagine there is interest in this question, there is tax in this question, then net profit means EBIT or EAT? EAT. Now tell me, return on equity, did we see the formula in the notes or not? Yes, return on equity. Yes, what is the formula for return on equity? PAT divided by equity. Adi he is asking now. Net profit to net worth is another way of asking you the return on equity. When we calculate return on equity in that formula, equity law what only should come? Equity share capital plus reserves and surplus only should come, because we are calculating return to whom? Equity shareholders, not for entire company. Yes, understand the point or not? Write down, sir. Keep the heading net profit to net worth ratio. Net profit to net worth ratio. Hello everyone, please. First write down formula. Net profit to net worth means net profit divided by net worth into 100. Below write down net profit means profit after tax, that will be equal to EBIT in given question. Did you understand why I am writing this? Net worth means equity. Equity share capital plus reserves and surplus. Equity share capital plus reserves and surplus. Completed writing the notes up to here. Equity share capital plus reserves and surplus. Shall we calculate the ratio together? Write down, sir. Particulars. 21-22 and 22-23. Write down. What is the profit after tax, the net profit? A. Tell me what is the profit after tax. See the question and tell. Rupees 15,000. 19,000. What is the net worth? Means equity share capital plus reserves and surplus. See the question. What is the equity share capital? 75,000 plus 25,000. How much it is? Rupees 1 lakh. Next. Rupees 75,000 plus 42,000. How much? 1 lakh? 17,000. C. Ratio equal to A by B. So what is the percentage in the first case? 15%. 19,000 divided by 1,17,000. How much? 16.24%. Can you please explain me what is the meaning of this? 15%, 16% means, can you please explain what is the meaning of that 15%, 16%? Last year, for 100 rupees of the net worth of equity shareholders, how much a return company has given? 15%. 15 rupees it has given. But in this year, how much rupees it has given? 16.24. For the same 100 rupee, I gave a magnified return or not? In that point of view, if you see, it is giving more return to the equity holders. Listening or not, everyone? Write down. In the year 21 and 22, for every rupees 100, of equity funds, company gave a return of rupees 15. As against rupees 16.24 in 22-23. Company made best utilization of equity funds. Company made best utilization of equity funds. Sir, I will ask you one small question. First, answer to my question. What ratio we calculated now? Net profit to? That can also be understood as return on equity. There I last write down note. Net profit to net worth is also known as return on equity. Is also known as return on equity. Okay, na? Okay, very good. Next, sir, we calculated almost all the ratios now with comments. Please tell me how many steps we completed totally as of now? 6 steps. What is the last step in this particular area? Step number 7. Write down, sir. I told you, this I will tell when we are doing the problem. Receivables collection period. I will give you exactly 1 minute time. First observe some numbers given there. I will ask questions, then don't come with wrong answers. Read the balance sheet and P&L properly. Don't waste time. Okay? First answer my question. When we are calculating receivables, we should take purchase as a sales. First give that clarity. Receivable will come because of purchase as a sales. 1 point over. Next. Credit sales or cash sales? Very good. Next. How much is a credit sale? Credit sales are 2,70,000. Next one, 3,42,000. Okay. Now I will ask you a question. What is the formula? What is the formula? Debtor. First, take calculator. What is the debtors? 50,000. What is the debtors? 50,000. Divided by how much? Listen. Divided by 2,70,000 into 360. 50,000 divided by 2,70,000 into how much? 360. Means what is the answer? 66.67. Almost 67 days you can't take the points. So technically how many it is taking here? Means what? Listen. This I will explain in a different way. Please listen carefully. I will ask you to do in another way. Sorry, I will do one thing. I will ask you to do in another way once after I teach this. First I will explain you what is the meaning of this 67 days. Listen, there is a caterpillar effect in the working capital management. I will tell you what does it mean. Tell me what are the various current assets. You write, I will, you tell, I will write. Very good. Cash, stock, debtors, bills receivable, prepaid is only a payment. Okay. Bills receivable, etc. Like this you can tell a 4 or 5 list. Correct? Now listen carefully. Stock, debtors, receivable. Okay na? What are all these? What are all these? Current assets. Listening. What are all these? Current assets. Okay. So when I ask current asset, obviously anyone will tell cash, stock, debtors, receivable, like that people will tell. Correct? My question is, tell me what are the current assets? Be in this world first. First cash. Second one? Next? Next? Like that you can write. Correct?
Yes, sir.
When you ask me the same question, I will tell cash and the answer over. So stock, that cash in the form of goods is stock.
Yes, sir.
My cash blocked in the form of debtors is a cash.
Yes, sir.
Stock is, you will, for example, I said 1 lakh stock. How much?
1 lakh.
You tell 1 lakh stock, I will tell my cash is blocked in the form of stock. It is a cash in the form of goods.
Yes, sir. Yes, sir.
Listening? Debtors, it is a cash in the form of realizable sale. Cash again.
Yes, sir.
Goods in the go down is called as cash. Goods in other's hand is called as debtor.
Yes, sir.
What is it? Goods in the go down, stock. Goods in the hands of customers, debtors. Anyway, goods is there. How you got that goods from air goods fall? What you have to do? You have to put money and invest and then manufacture or not. Your cash is blocked in the form of debtors. Your cash is blocked in the form of stock. Your cash is blocked in the form of receivables. Everything starts only with one thing. What it is? Answer. Now see the cycle. You started with cash. You started with? From where you got the cash? Debtors. You raised money from the equity and the debt. From the money you got, you invested in the stock. Stock went into work in progress. Work in progress generated finished goods, became stock in godown. It converted into sale, became debtors. Again debtors has paid, cash came. Cash becoming cash in 67 days. That is the meaning he wanted to tell. What do you mean 67 days here? Cash becoming cash. That's called as a collection period. How many days you are again getting back the cash? How much cash you invested? Some amount, X amount you will put the money or not? Like a boomerang, it should come back again. Cash becoming cash. How many days? 67 days it has taken. That's the meaning. Lesser the period, better the company. How fast you are in rotating the cash. That's the meaning of that. That's why I told you I can't explain now. I will explain when we do the problems. I said because now with the number of days we can explain more easily. Lesser the period, better the company collection process. Correct? What is the collection period for the next year? Next year. First year 67 we calculated. Like that we can also calculate for the next year and tell. Yes, sir. You can also take 365. We assume whenever you wanted to take, for example, in this question, in the Republic Day, listen, in this question, listen, in this question, anywhere did he said that take year as 365? Therefore, you can assume in two ways. In exam, if you are doing, you can either take 360 or you can also take 365. It's an assumption based. Understanding sake and easiness, 360 will be better always. That's why considering 360. Examination, you can also assume that year contain 365 days, you do. Small difference will come in the answers. That's all. Remaining everything will look like the same. Sir, everyone at least understood the concept clearly. First, write down there. Receivables collection period. Write the formula first. Receivables collection period. Receivables collections. 1 minute gap you are talking here. Please write. We are completing this problem with this. Receivables collection period equal to tell the formula. What is the formula? Debtors divided by sales into how many days? 360 into 360. Write down. Particulars. (21, 22, 22, 23). Write down particulars 21, 22, 22, 23. Write down the numbers clearly. A. Debtors. How much will be the debtors here? 50,000. Second? 80. B. No, not sale. What sale we have to write? Credit sales. Sales means credit sales there. Tell me how much? 70. Second? 40. 50,000 divided by okay na? How many days? Sorry, 86, sorry. 86 point, how much you got? 86.31 means it crossed 86 already. 87. Because a fraction of days is not possible. Sir, even if you get answer as 86.03, take it 87 only. Why? Can you tell the reason? 86 already over. 0.3 or 0.03 means one day completed na? You should take only 87. Okay, how many days sir? 67? 87. This is the answer. Now tell me, company performing well, it is good in collection of cash, it is bad in collection of cash. Bad in collection. First it should change its debtor collection policy. Because you have created cash into cash for how many days in the last year? 67 days only you have done the turnover. But how many days it has taken in the next year? 87 days it has taken. Performing well or not performing well? No. Debtors collection period has to be revisited again. Right down. Comments. In the year 2021 and 22, the cash conversion cycle (67 days) whereas it is increasing to 87 days in the year 22-23. Hence, it is not good indicator and company should revise its debtors collection policy. Company should revise its debtors collection policy. See with the numbers how much decision making is coming out. Like this, chartered accountants sit in a company and give advices to the companies. This is how your company is performing. This is what we call as a diagnosis report. Okay. Now, how many ratios we have done here totally in this question? 7 ratios. So 6, 7. Everything is completed. Answer number 1 is over here with this. Everyone understood the first question clearly? Yeah. This is how we have to do the ratio analysis from like this, step by step, each and every ratio. If you do, clarity will come. By the way, everyone in the class, I will read out the answers, check whether the answers are tallying from the material or not. Did we see the answers in the study mat? But we have done. Let's check the answers now. Open the answers. Okay, na? One by one I will tell the answers. Please check. 21.3, 20.3. Hey. 21.3, 20.3. 16.3, 15.2. 5, 5.08. 3, 2.54. 4.72, 3.87. 15, 16.24. 67, 87. That's all. Answer over. This is the question here. They have taken points, the days have taken, but don't take like that. Take it 87. Okay. So that is the answer here. With this, we have completed the concept relating to the basic ratios calculation. Last 7th point, institute has taken average of stock, average of sales. You need not take like the direct sales, you can consider, no problem. Okay. With this, the first 10 marks question, which was recently tested in the examination, like this the questions are coming. Sir, first point number 1, everyone tell me, all the questions came from the ratios what we already discussed or not? Yes, sir. What? Thank you. Hey. Thank you, sir. Huh? How much? What is the time? Sorry, another 10 minutes I will only leave you. 1 o'clock I will leave. 12:45 I will leave. Anyway, I have class at 2 o'clock. At least I will go by 2:30 kada. So, very punctual. People should learn from me. Sir, okay, see here. Second question, illustration 2. We are not going to do the answer today. Analyze the answer, we will do in the next class. Like this, over a period of time, ratios will be completed. Over a period of time. Very big chapter. Na? So let us see. Illustration number 2. Following is the abridged balance sheet of Alpha Limited. Liabilities, assets. Shall we continue? Yes, read the question. 10 minutes can't you spend? Complete it. Following is the abridged balance sheet of Alpha Limited. Share capital, profit and loss account, current liability. What do you mean by profit and loss account there? Reserves and surplus. Profit and loss account on the liability side is called as what? Reserves and surplus. Land and building, plant and machinery, stock, receivables, bank. With the help of the additional information furnished below, you are required to prepare trading P&L account, missing figures calculation. Nothing they will give. With the information, we should prepare P&L balance sheet. We should prepare trading and P&L account and balance sheet as at 31st March 2023. The company went in for reorganization of capital structure with the share capital remaining the same as follows. Share capital 50, other shareholders funds 15, 5% debentures 10, current liabilities 25%. Debentures were issued on 1st April, interest being paid annually on 31st of the March. Land and building remain unchanged. Additional plant and machinery being bought and further 5,000 depreciation was written off. Total fixed assets then constituted 60% of the total fixed and current assets. Working capital ratio, which ratio? Means what ratio? Current ratio is how much? 80:5. Quick ratio, liquid ratio. I made you in the notes also. Liquid ratio, another name is what ratio? Quick ratio. How much? 1:1. Ideal ratio they are maintaining. What ratio? Ideal. Okay, next. Receivables. 4/5 of the quick assets to the sales ratio revealed a credit period of 2 months. There were no cash sales. Return on net worth is 10%. What do you mean return on net worth? Return on equity. Just now we have written 15-20 minutes back we have written, again you are forgetting. Return on net worth also called as what? Return on equity. 10%. Gross profit was at the rate of 15% of the selling price. Profit can be of 2 types kada. Profit on cost, profit on sales. This is a profit on sale or cost sale. Stock turnover was 8 times for the year. Stock turnover means what is the formula? Cost of goods sold divided by average stock equal to how much? 8 times. Ignore taxation. This is the question here. 12 marks question given in exam. Read the question first, later we can get understanding. One by one I will ask the questions, at least try to answer them. Tomorrow anyway from the beginning I will tell one more time. I will read this entire question again. But still make your human effort. First take 2 minutes time, read the illustration. Seeing the book, don't sleep. Sir, when time is given, please read it. Hey, read the question first. I will ask only one question for today. You read the question first. One question I will ask. Done? Try to answer. You answer that and leave. Easy question, very easy. Seriously, promise on you. You will definitely answer. Promise on you. You will die if you don't answer. Don't say the answers. Okay, na? Read the question. First, I will ask you one question, answer. Company went for reorganization of capital structure, correct? With the share capital remaining the same as follows. Okay? Share capital how much? 50%. Other shareholders funds will be 5% debentures. Current liabilities. Totally, what is the liabilities side total? 100. In the total liabilities 100%, how much is filled by share capital? 50%. Other shareholders? 15%. 5% debentures? 10%. Current liabilities? Company went for reorganization. Reorganization means capital structures are same or different? Different. Same or different? Different. How much it will be? Listen. One hint they have given. Share capital remaining the same. Means share capital will be at the same. If 50% is equal to 1 lakh, 100% will be how much? In the 2 lakh, how much will be 15%? 30,000. How much is the 10%? 20,000. How much is the 25%? Total is how much? That's all. Bit number 1 completed. This is the first information that they have given us. Okay. Using that hint, we have to start doing the answer. Treasure hunt type. Robin Hood type. You should start doing using the hints that were given. Puzzles we will do, na? Like that only this chapter will be. So one hint they have given. Using that hint you got this amount. Hello, listening? Yes, now I will ask a question. What is the equity value here? Net worth. Net worth how much? What is the net worth? 1,30,000. 1,30,000. What is the capital employed? What is the formula for capital employed? First tell me. Equity plus debt and reserves and surplus. Correct? How much it will become? 1,30,000. Sorry, 1 lakh plus 30 plus 20. How much it will become? 1,50,000. That's how we should understand it.
Yes, sir.
Hello, listening? Yes, sir. Next. I will ask you one by one the questions again. Answer this. Working capital ratio means what? What is working capital ratio? Current assets by? We know current liabilities. How do you know? 25% we have calculated. So we know current liabilities or not? Yes. Using that ratio, can we calculate current assets or not? Over 1 point. Current assets, like everything is a credit sale, he said.
Yes, sir.
That's why I asked you to read the question.
Yes, sir. Yes, sir.
There is no cash sale. Means all the sales are what sales? Credit sales. Tell me. Answer my question. Gross profit is how much percent of the selling? 15%. Okay, very good. Now tell me. Working capital ratio means current asset by current liability. Correct? Current asset by? Next, very important. Liquid ratio means it will take into consideration stock or will not take into consideration stock. What are the things that will be removed? Stock, prepaids. Means what only will be there? Debtors only will be there and cash will be there. Correct? What will be there? Debtors, cash. Using that we can calculate debtors. If you calculate debtors, that entire thing becomes sales. Because there is no credit, cash, sale. Everything will become sale. Like that we start calculating all the numbers. Did you get the point how to do this? So that calculations and all we will do in the next class. Okay? Because it takes some time. I have to re-explain all the concepts one more time. Once I explain, we will do. So tomorrow also same timings, right? Target is at least we should do 3 questions in the tomorrow. Huh? Not today, I am asking tomorrow. Who's 11:45? Mine, huh? 11:45 to? No, sorry, okay. At least we should have... One second. At least if that be the case, 11:45 to 1:30, yeah? 12:45, 1:30, and 1.5 hour almost. So in that 1.5 hour time means we can complete 3 problems maximum. If the full session is given like this, we can complete around 4 to 5. All problems will not be like first problem. Then people will die. If all problems are like first one, then we need not do this chapter. All problems will not be there. First problem, and they have given recent examination a 10 marks question. From there, every problem will be easy only to calculate. First, everyone tell me, are you all comfortable with question number 1 clearly? Yeah? Yes, that is a high range question that they can give. Remaining all are missing figures like this. Okay? This is easy, sir, than that. Missing figures is easy. You can, one answer if you get, from that you can take the link and you can complete the full answer. Okay? These are only easy. Sir, okay. Next session we will first do this problem and do another 2 problems. Okay? So, thank you very much. Have a nice day. Bye-bye.